Vikas now. Well, let's welcome our next guest on the show. We have Vikas Khemani, founder of Carnelian Asset Management and Advisors, who joins us on the show. Hi, Vikas. Good afternoon. Happy New Year. Wishing you, your team, all the very best. And hopefully 2025 is a cracker. But we have got plenty of cues in this year, both global as well as on the domestic front. How are you feeling about this year? One would say that 9 years on the trot, the Nifty is giving positive returns. One down here to bante, but it doesn't seem to be coming. Just take a look at the start of the year. How are you feeling, and what kind of positioning do you have with regard to the markets as of now?
Nigel, first of all, wish you, your viewers, and everybody a great 2025. May all of you have great health and prosperity. I think, like you rightly said, that we have had a great run in the recent past. 9 years of uninterrupted positive return, and specifically in the last couple of years, we have had a great run. So when you are coming on the backdrop of such kind of run, obviously, it is natural to feel the way you are feeling. I would say only one thing, that, markets are about long-term wealth creation journey. And in that long-term wealth creation journey, there will be many ups and downs and long-term corrections. And as far as the uncertain matters are concerned, I think in my career of 25 years, I don't know any time when there's no uncertainty around. There's always some uncertainty around, with some elections, some policy, some global events. So I think this year is no different, in my opinion. The point to understand is that structurally we are in a bull market. We are in a transformative phase of India. And in that transformative phase, there will be a couple of quarters, there will be maybe a year of consolidation, and maybe some down years. But they are par for the course, they are expected. And I think this year, 25 year, would be, again, may not be a bumper year, but, one should kind of keep the expectations low. But I would say remain invested, or if market corrects, turn out to be volatile, take advantage of that. It will be stock pickers market, like always, but I think probably this year will be a little bit more important. So I think that has to be kept in mind. But I'm not sort of bearish on the markets. But of course, when you have such kind of pace and background, it is natural to have a consolidation. Sometime it could be time consolidation, sometime it could be value consolidation, depending on the news flow development which happens in the market.
All right, Vikas, everyone's waiting by to see what Trumponomics can do, 2.0, what is there in store. But if you come back home, our government as well has done a fair bit, and we've laid the building blocks for a big economic drive, for the next maybe a couple of decades as well. What do you expect from the government of India in this year, 2025? Everyone's not yet started speaking about Modi 3.0. There can be that booster shot that could come in, maybe in the budget, maybe some policy changes as well during the course of the year. And that's what could give an additional fillip. Your take?
I think, see, again, this government has continued to do what it has said multiple times. I think providing a lot of growth enablers, starting from significant investment in infrastructure development across ports, railways, road, logistics, everything. I think airports, and also boost manufacturing. These are the two very big important drivers of the growth for India. Of course, India was always doing very well in services. India was doing reasonably well, sort of on IT side and all. But manufacturing was much needed boost, and infrastructure. They are all, in my opinion, structural and decadal trend, and they will continue. It might happen that in a quarter or two, since we had election this year, they slowed down. Execution might slow down, but I think you will see infrastructure investment continuing, manufacturing investments continuing, exports picking up. All those trends will continue, and that's the reason I said that India structural repair has happened. We are on a structural path. 1 or 2 quarters here and there can happen. If for any external or reason or any other reason, if volatility comes, it should be seen as an opportunity rather than risk, is my take.
Vikas, I know you've got a very bottoms-up, individual stock picking approach. But if you had to guide our viewers to construct their portfolio right now, if there is a dip, if you had to tell them what they should go out there and buy, so without giving names, how would you, advise our shareholders, advise the people who are watching you right now?
In my opinion, from 2025, structurally speaking, usual, all, India is doing very well. But I think from a 2025 perspective, I personally think that, banking and financial services will do well. 24, we did not do well. And I guess a lot of value corrections has happened. But if I were to look at from, next, 6 to 12 months, you will see value coming there and good returns coming about in this year. Pharma and healthcare continues to be a very, very large, significant opportunity. Within that, there are many models, but I'm just giving as a basket, which is very, very promising, including CDMO. And I think manufacturing, we've spoken many times within, again, manufacturing is a very large basket, but, it again boils down to identifying the companies and segments and sectors. But that I think also is a fairly significant opportunity. Across these three, in my opinion, you will find plenty of opportunities which will give you, including this year, opportunities to make money. And we are, I think, overweight, across all these three specific segments I did mention.
Are you less overweight now on manufacturing opportunity, considering that you were one of the early entrants into the up move, and we've seen a fair bit of a rise in individual stocks? So are you less overweight now? Are you making space to, say, go overweight on healthcare, pharma, which you're talking about?
Not really. I think we've been continuing to be overweight. I think this question I've been asked in 22, 23, 24 every year that, it has done well, will continue to do well. I think probably here I will again reiterate that this is a structural decadal opportunity. We will see many, large companies coming out of in the space of manufacturing, which we have not seen in the past historically. So hence, it's you will keep. Of course, I'm not bottom up idea. Those things have to be done, but I think structurally speaking, we are still overweight in manufacturing, and we still see lots of opportunity. And I must remind that manufacturing is not a segment; it is actually across various. And when I'm talking about what sits between import substitution and export oriented opportunity between across many sectors, whether it is chemical, specialty chemical, garments, capital goods, defense, electronics manufacturing. It's a very wide segment, but where value addition happens is not commoditized player. Those kind of manufacturing is what we're talking about.
Vikas, what about the consumption theme? You get various sound bites from various sectors. It's getting a little confusing as well. Zomato on one end talking about very, very good orders. Swiggy is talking about good orders. Some would argue that discretionary spends is still intact, while some are saying maybe it's time for rural to start picking up. So what's your view on, consumption, and how are you all playing this theme? What to buy?
Nigel, I think very interestingly, last month we wrote in our letters to investor where we said that, everybody's saying consumption is slowing down. We don't believe that. I think, when the per capita income is growing, it is, I think, the narrative is being created by large incumbents. One has to see that a lot of consumption patterns are changing, consumer behavior is changing. And because of that, the market share is getting diverse and, moving away from A player, A segment to B player, B segment. For example, housing sales are growing all-time high. Wire and cable sales are growing at 20% plus, but tiles are not selling. How do you kind of reconcile to this? This does not make sense, right? When you look at and examine, you see that there are many more players are coming, from Morbi and all, and different players who are eating into market share of some of the incumbents. Same way it's happening in, whether it is paint industry, or same way it's happening in the biscuit industry, or same way it's happening in garmenting and many more. So, one has to see the changing customer behavior, competitive intensity coming from different kind of segments. Today, because of democratization of technology and access to the high class manufacturing, and also ability to market product very easily to customer, right? A small player is also able to compete with a large incumbent player delivering goods at a better quality and better price. And that is actually, if you ask me, creating a bit of a ripple in the whole consumption space. I'm not saying this is true across the board, but many segments. And as a result of that, we have to really study consumption in a very different light. And as a result of that, many of the large companies are getting derated. And they may not have the same kind of market share, same kind of valuation. Hence, consumption, while structurally the very large opportunity in India when your per capita income is going up, but within that, one has to be very careful, mindful of the changing trends, changing sort of potential disruptors.
That's a important point, and it's the same thing that even Sunil Singhania was telling us yesterday, that because capital has been so abundant, funding has been there, it's given rise to competition, capital feeding competition. So exactly in the same space, in tiles, for instance, so many new players, so that entire demand pie is getting divided into more players. And that's the reason why for individual companies, sometimes you feel that, oh, the volume growth is, lackluster, low single digits. But Nimesh is with us. Nimesh?
Hi, Rima. I just wanted to ask a question to Vikas because he's joining us. Because, I was looking at the best performing AIFs of 24, and 2 of your schemes are part of it. So congratulations on a great performance for 24. I just want to ask a couple of questions. One, what has worked for 24 for you, which has led to a big outperformance? And 2, are you still going to bet on the outperformers to do well? Because, there is a contra feedback that maybe the underperformers of 24 could do well in 25. So your quick take on both the questions.
Thank you very much. First of all, for again, we basically, Nimesh, you've seen that trying to remain focused on our investing style and philosophy, and what has worked very well for us is again, of course, first identifying the right segment, but within that, more importantly, selecting the right sector. For example, I think last year, if you look at, in our banking sector, the best performing stock has been ICICI Bank, right? But we've been holding that stock for long and continue to remain very large position in that. But other banks have not done. Federal Bank we've been owning, and that has done well. So again, in a sector, you can identify a company which has done very well. In manufacturing, space, we had many stocks, which has done phenomenally well for us, which has contributed to significant alpha. IT, where people think that sector is not doing well, we have had many companies which have contributed, especially in the mid cap IT space, which have contributed reasonably large to our wealth, to our performance. So again, I would say that our investment philosophy is identifying where there's a catalytic movement happening, change is happening, acceleration in the growth happening, and good quality management where we can do, after doing our work, we are convinced that they will deliver. The moment you identify those things, it can turn out to be well. So we have had a superior performance across last 5 years, right? And this year it happens to be just one of them. And we believe that if we keep doing that, next year should be no different. So again, the idea is to just keep down identifying those changing catalytic moments of providing accelerated growth, which companies can beat the market, just like how we did in banking, how we did in manufacturing, how we did in IT.
Thank you very much for joining in, Vikas, and wish you, your team, your family a very happy new year. Let's get into a break. On the other side, as always, we'll talk about what dealing rooms are saying. Nimesh is still with us.